The E-mini yesterday formed a breakout mode pattern on the daily chart, IOI. We're close to yesterday's low, so we're probably going below yesterday's low, and that would trigger the sell signal. If we go above yesterday's high, it triggers the buy signal on the daily chart. Because yesterday was a doji bar, it's more of a limit order market bar, and therefore it's a bad sell signal and a bad buy signal. In other words, there are probably more buyers below yesterday's low than sellers, so it's not a great sell. Probably more sellers than buyers above yesterday's high, so not a great buy. Having that small doji body weakens the case. There's still a chance that the weekly chart can go upside down. Is it likely to happen? Well, it's not likely to happen, but it's certainly reasonable because the weekly chart and monthly charts are so overbought. There's an increased risk of a surprisingly big sell-off, even though the daily chart is in a very tight channel like this. The daily chart had a buy climax and a wedge, reasonable top. It triggered and failed, and now there's a bear IOI, a bear inside bar after an outside bar. So that's another sell signal. But because yesterday closed above the low, far above the low, the day was a doji bar, and it created a weaker sell signal. You can see we're right at yesterday's low. And if we get below yesterday's low, we trigger the sell. But when you look at that screen, you don't think, wow, if it goes below yesterday's low, it's really going to drop far. You look at the screen and say, wait a minute, it's a tight trading range. If it goes below yesterday's low, the bulls will probably buy the bear breakout, betting that it will fail. Globex market, very tight range overnight. We've been sideways here for a few days. Big up, big down, big confusion, and usually results in a trading range. You have a bear leg, a bull leg, and then you expect a bear leg, which is what we have. The bulls want a double bottom, a break above the neckline, and a move up to the prior high, and the bears want a lower high major trend reversal and a trend down. More likely, we're just going to go sideways for another day or two. Bulls trying to prevent the sell. Remember, I said that it's an IOI pattern on the daily chart, but it's a doji bar yesterday, so instead of stop entry traders winning, the limit order traders will probably win. That means that there are probably more bulls trying to buy at and below yesterday's low than there are bears trying to sell. And that's why the low of today is right at yesterday's low. There are apparently a lot of bulls with limit orders to buy at yesterday's low. Do I think we're going below yesterday's low or above yesterday's high? Yes. Yesterday was a relatively small day, plus it's an IOI pattern. It's a breakout mode pattern, so I think traders want to know what's below or what's above yesterday. If the stop order traders win, we'll get one or two big trend bars. For example, if the bears win on the break below yesterday's low, we'll get one or two big bear trend bars. Right now, that does not look likely. And if the bulls win, we'll get one or two big bull bars above yesterday's high. Again, it's too early to say that. Most likely, since we're near yesterday's low, we'll trade below yesterday's low. Remember, we've had that. This is a gap on the daily chart, the two pink lines, and we tested it yesterday. We tested it again here. We're testing it again here. We're pretty close to it. If we do not accelerate upward fairly soon, we probably will close the gap, get below the bottom of the two lines. It's not an important gap. Here's the daily chart. Here's the gap. Here's the bottom of the gap. And here's the top of the gap. So it's a very small gap. This gap up is probably an exhaustion gap. So if today, for example, we trade below the high of this bar, then this becomes an exhaustion gap. And exhaustion gaps do not mean bear trend, but they often mean a temporary end of the bull trend. Market can go sideways for a long time, gapping up and gapping down. So gaps are not all that important. Big gaps can be important, but small gaps are not. So we have a bull bar, a double bottom with yesterday's low, but the bar is not all that big and it has a fairly prominent tail. So not a strong buy signal. All three moving averages are very close to one another, and that represents a sideways market, a neutral market. 60-minute chart up here, I said if we get a reversal, it'll probably be minor and lead to a trading range instead of a bear trend. But once you're in a trading range, then you can get a major reversal. For example, this is it's a lower high major trend reversal, but a bad sell signal bar. Plus the pattern only has 6 bars going up, so that is not a very high probability pattern. Looks like we're going to go below yesterday's low and trigger the sell signal on the daily chart. Doji bar weakens the sell signal. The one thing that's good is it's a second entry sell. We had a reasonable sell here. The bulls immediately bought it when they broke below the wedge. And now we're getting a second sell. So it's consecutive sell setup. Should you sell on the stop below yesterday's low? I would not. Look at the screen. You're at the bottom of a 100-bar trading range. Yes, you might get trend resumption down after this sell-off, but we've been sideways for 100 bars, and the bulls were hoping that we reverse up from a higher low major trend reversal, bear trend, bull breakout, and then higher low, lower low with some kind of a major trend reversal here. Okay, we just triggered the sell signal on the daily chart. And what happened? Did we collapse below? No, we bounced up a couple of ticks. Now we're getting a 2-bar reversal, 1 and 2. So if 2 closes on its low, that would be a bear pattern. But again, we're at the bottom of a 100-bar trading range. And not a lot of traders will sell below 2, especially since it's bouncing. We went below 1, a bull bar, probably buyers below. We went below yesterday's low, a doji bar on the daily chart, probably buyers below. And you can look at the Globex 15-minute chart, sideways for a lot of hours, 6 hours or so. On the 10-minute chart, this is a bear bar. The bear is hoping for trend resumption down. Bear trend, pullback, and then trend resumption down. And the bulls are hoping for a major trend reversal up. But you can see if bar 2 closes on its low, the 10-minute bar then becomes a bear bar, closing below yesterday's low. But why is it not a big bear trend bar? Why did we not gap below the bottom of the gap? The bears could have done something fairly dramatic and very convincing that they are in control, and they were unable to do that, and that's because they are not in control. It's still neutral. Over the past couple of weeks, there's been a change in the character of the market. We've been getting bigger bear bars early in the day. Prior to that, we had a lot of bull bars. So that means that not much sell-off on the open. You can see how small the tails are below the bars. That means, yes, there was a tiny sell-off on the open, right, over this whatever, 30 bars, right? Most of the bars have very small tails below, and that means that most of the days there was only a tiny sell-off on the open. And over the past couple of weeks, we've been getting much bigger sell-offs on the open, so a little bit stronger bears. For the bulls, failed to break out yesterday's low. Yesterday, not especially big, and therefore today could easily become an outside up day. We could easily get above yesterday's high. Right now, probably sellers around the 3 moving averages. So some bears will not sell the one high, but they might sell a point higher or at the moving averages. And bulls, it's a swing buy above 1. We have a micro double bottom. We gapped down and rallied. We sold off and rallied. So a micro double bottom, failed breakout yesterday's low. I would wait. The bears have not done enough to make traders sell at the bottom of a 100-bar trading range, and the bulls are not doing enough to make traders eagerly buy. The market is in search of more information about which side is going to win. Breaking below yesterday's low a second time, again triggering the sell signal on the daily chart. But the bears need consecutive big bear bars for traders to believe that this is the start of a bear trend, resumption of the trend down from over here. And the bulls want a double bottom and an early low of the day. Since we're low and so far we're not selling off strongly, I think it increases the chances that we'll get a bounce. But all the bears need is a couple big bear bars to make traders think that the bears have won. They have 2 bear bars, one on 2 and 3, but prominent tails. They need to get bars that look like this. You see how quickly that reversed up. I'm not looking at volume, but that was probably, several very big volume trades. Bulls made money buying below 1. Whenever I see consecutive bull bars on the open, I conclude always in long. In other words, at least slightly higher price is likely. Whenever I see consecutive bear bars on the open, I conclude always in short and believe that at least slightly lower prices are likely. The tails on the bottoms of 1, on the bottoms of 2 and 3, the bull bar on 1. This is not strongly bearish. The bears need to do more. They have the sell setup on the daily chart, but the 5-minute chart is not collapsing. And you wouldn't expect it to collapse. Look at the Globex chart. Look at the past 6 hours. The bulls hope it's bull trend, pause, and then more bull trend. Bears want a double top, break below the neckline, measured move down. Now, it looks like we're holding this level well. So right now, it looks like we're not breaking below the bottom of a 6-hour range, and that usually means it'll go up and try to test the top of the range. Is anyone going to buy above 4? Let's say there's a 4-tick bull body closing on this high. Traders will buy it. It'll be a reversal up from below yesterday's low, and the bulls will again have successfully tested the gap. The bears tried to break below the gap several times, could not. Again, and we're trying again to close the gap, get below the bottom line. By spending so much time at the support level, eventually you run out of buyers. The bulls keep buying, and if the market does not reverse up, the bulls stop buying and you get the breakout. This is spending a lot of time at a support level, so the bulls need to get a reversal up early today. If they get it, then we might get an outside up day. There are always ways to draw channels. So every bear trend, if you look, you'll see some kind of a channel. Okay, 3 consecutive bear bars, none all that strong. Anyway, so this is what the bulls see. They see bear channel, bull flag, and they want the market to get up to the top of the channel. But not a good buy signal bar 4. And for the bears, not good big bear bars. So not many traders trading. People are wanting more information. Potential for an outside up day, potential for a big sell-off. Remember the weekly chart over here, we could get outside down and trade below last week's low by the end of this week. That would be very good for the bears. It would increase the chances that the pullback to the weekly moving average has begun. Bears trying to get a gap, 5 closed below 4 low. They're close to closing the gap on the daily chart. Let me just get rid of one of lines. Okay, so that's the bottom of the gap. That would turn the gap up on Friday into an exhaustion gap. Okay. To me, just getting to it, I think the bears really need to get 1 tick below it. Will the limit order bulls get trapped? The bulls buying below bars, buying below 1, buying below 2, buying below 3, buying below 4. Are the bulls going to get trapped? Is it going to stay below that 4 low, forcing bulls to sell out of their longs lower for a loss? So this little bounce is important. This is that measured move target from this gap. We're coming back to test it again, 60-minute chart. Will bulls buy the 5 close? I don't think so. This is a good start for the bears. So it's sell the market, sell the close, stop at a minimum, a couple ticks above the 4 low. Bulls want an exhaustion bar and a reversal up. You can see we're testing that measured move target. I don't have it drawn in any more on the daily chart, but this is the measured move target. Some bulls will buy, taking a chance that it's a sell vacuum test of critical support. I would wait to see if we reverse strongly up. And the bears want the market to break strongly below support. So they want 6 to be a bear bar closing on its low, increasing the chances that this is going to be a bear trend day. Weekly chart, you can see it's becoming credible that we could go outside down and get below last week's low. This happens all the time when you're getting a correction and the market falls below a significant higher low. Is it a breakout and the start of a bear trend, or is it simply a bigger bull flag, 2 legs down, 1 pullback 2. So breaking below that low is important. 60-minute chart, we're right at the trend line. This is the daily moving average. So what do? If you're short and 6 closes near its high, I think the bears get out. Aggressive bulls will buy, but it's a 6-bar bear microchannel and not a high probability buy. A lot of the bulls will wait to see if we reverse up strongly or to see if we get a micro double bottom like yesterday. Down, first reversal up did not get far, and then second reversal up. But this is not good for the bears. They need consecutive big bear bars. Really important, right? Will the bears get a second consecutive bear body? That would increase the chances that this is going to be a bear trend day. And you can see the bull's got a 1-tick bull body. While the 4 bear bars make a bull trend day unlikely, the tails up here and the bad follow through here still leave open the possibility of a trading range day. Our trader's going to sell the 6 high. No, you got to sell the closed bears 5, disappointed 6, and a lot of them are buying back their shorts because of the 1-tick bull body on 6. And the bulls, I don't think a lot of bulls are going to buy the 6 high with that 1-tick bull body. However, if we start to go up 2 or 3 bars, traders will conclude that this is simply a 2-legged pullback to the measured move target. So 1 pullback 2, we broke out above that measured move target, right? We broke above it, and this is a 2-legged pullback to it. The bulls want trend resumption up, so up, ABC pullback, and then up more. And the bears want this to be a double top and the start of a sell-off. We're always in short. And the bulls need at least a couple consecutive bull bars to make traders believe that the bulls have reversed 5. Bearish, but not impressively bearish, right? We still have the possibility of a big high 2 on the 60-minute chart, leg 1 pullback, leg 2. I think the odds, the selling is enough to make a big bull trend day unlikely. Also, not only do the bulls have to get above the high, they have to get above the 60-minute moving average. And with this selling, and then this selling, and then this selling, I think it'll be hard for the bulls to do that. However, the bears need more signs of sustained selling. They have 4 bear bars, but bad follow through 6, 7. And they need to keep the gap open below 4, and they need to start pushing this down. There's enough confusion, I think, to make the day likely to be mostly a trading range day. Will bulls buy above 7? I would not. I would wait for a better. It is a micro double bottom. We went down on 5, up on 6, down on 6, up on 7. But 4 consecutive bear bars, I would wait for a second entry buy. You can see the 60-minute chart, just 2 legs down. They want to get back above the neckline of, you can call it a double top. This is the neckline. And that is this low from a couple of days ago. And the bears want to keep the gap open. They do not want to get back above the 78 low. For the bears right now, 7 is a low one short, but 2 bull bars and one of them is pretty good. So not a very good looking sell. 3 consecutive bull bars, a weak sell signal below 8. Bulls are trying to close the gap below 4, and they're trying to get above that low on the 60-minute chart, which is right here. We got right to it. Are we still always in short? Yes, the bulls need to do more. When you look at it, it's confusing. And whenever you look at anything and it's confusing, you're probably in a trading range. What about simply selling here and putting a stop? A tick or two above the 4 low, taking a chance that the gap stays open. We get situations like this all the time, where you're taking a trade that has very little risk. Your stop is close, and that always means the stop is probably going to get hit. Whenever the risk is small, the probability has to be small as well. But that does not mean the stop gets hit and we become a big bull trend. It just means the stop will probably get hit, and the market, might go sideways, might go down, might go up. But whenever you have a very tight stop, the odds are it's going to get hit. Everybody knows that a strong breakout up or down on the open has only a 50% chance of success and a 50% chance of a reversal. Yesterday, strong sell-off, reversal up. That's a sell signal, a low one short, but 3 bull bars. A lot of traders will not take that sell. The bears kept the gap open below 4. You have sell the close bears 5, disappointed 6, 7, selling more 1 point higher, 2 points higher, and trying to buy back their shorts back at the 5 close. So that increases the chances that there are buyers here around the 5 close and below 8. Big picture, the weekly chart I think is good for the bears, but they need to start getting a convincing sell-off, which they do not yet have. I always pay attention to what happens at that close, the 5 close, when you have disappointed bears. Do the bears buy back their shorts and create a small double bottom, or do bears hold on to their shorts and you get a bigger breakout down? Bulls are hoping that this is going to be a second entry reversal up from below yesterday's low. Remember I said the first reversal of 6 it was a low probability buy. The bulls wanted a second entry, and the bears are hoping that this is the start of a big bear trend day. Looking good for the bears right now. Is it another parabolic wedge? Up on 1, up on 6, maybe up on 10? It might be. Yesterday we had a similar pattern, but we're getting decent sized bear bars. So it increases the chances that today's going to end up as a bear trend day. It could be a huge bear trend day. Right now there's no evidence that it will be a huge bear trend day, but the context on the daily, weekly, and monthly charts is good for the start of a sell-off. So any one of these days could end up being a huge bear trend day. A lot of days start out that way. Most do not finish that way. To buy above 10, suppose we get a 2-tick bull body. A lot of traders will wait to see if we reverse up strongly. We have a sell signal on the daily chart, and the weekly chart and monthly charts both are probably within weeks of a start of a correction. And so any day can be the start. All of these early sell-offs have been attempts at a start, but most reversal attempts fail. Right, here's a pretty good one, and failed. Failed. They all become reversals. Failed. So you can see that betting that any one of them is going to be the start of a bear trend is a low probability bet, because you can see most of them lead to reversals. Is anybody going to buy this? If you're a computer, you might, but unless it reverses up pretty strongly, I think, it's just sell the close, sell the market, sell pullbacks. If today does become a big bear day, there'll be plenty of opportunity to sell. We'll get some decent low 1 pullbacks near the moving average, low 2 pullbacks. So if you're not short, or if you're not selling here, that's not a problem. It's not going to go straight down like this all day. It'll start to get closer to the moving average. Bulls making another attempt at a parabolic wedge bottom, and we're near the end of the hour. The market often tries to put a tail on the 60-minute bar at the end of the hour. For traders to buy above 11, I think a lot of traders will want a very big bull bar closing on its high. Or a big reversal up like that. They want something like this, or like this. Similar situations, selling off bottom of a channel. Here the channel is broader. Today it's more parabolic. Whenever you have a very tight channel that reverses, you usually need some kind of a double bottom. Parabolic sell-off. The bulls needed a double bottom before they got a reversal. Globex 60-minute chart still could be a big wedge bull flag. So strong rally, and then 3 pullbacks into a big wedge bull flag. Let's say it's a very good looking bull bar. It's still probably a minor reversal. and not a strong buy. Higher probability, wait for a second entry buy, like a double bottom. The bears, I think, will get out above 11 if it looks like this when it closes. And then they have to sell again below a decent bear bar. They might wait for a low 2 because this is a parabolic wedge, and any type of wedge will try to get a couple legs sideways to up. Let's say there's a 2-tick tail, and then I think nobody should buy it. 1-tick tail or close on its high, possible low of the day, but I think better probability to wait for a second entry or for a very strong reversal up. We're fairly far below the moving average, so that limits the downside over the next few bars. So that means we might go sideways. We might start to do this. While it's a possible low of the day, parabolic wedge, I think it's not worth taking the buy above 11. It's okay to get out of shorts thinking that we have a parabolic wedge and the selling might stop for 5 or 10 bars, but I would wait to buy. 60-minute chart at a trend line, bottom of the channel. A lot of times when the market goes quickly one way on the open, it then enters a fairly tight trading range. 15-minute chart, bottom of a channel, but not a good buy signal bar. Big tail, probably start of a trading range. Low one short, we had a bull bar 1 and they sold below it. We had a bull bar 8, they sold below it. And we have another bull bar 12, but I suspect buyers below. It's the third push down. Some bears did not get out above 11 because it only had a 2-tick bull body, but they will get out above 12. A lot of the bears will get out above 12. It's still always in short, and they'll look to sell again below a decent bear bar. At least a 2 or 3-tick bear body closing near its low, or a 4 or 5-tick bear bar closing below its midpoint. The sell to close bears 10, the sell to close bears 5, when it got back to their close, they did not buy back their shorts. I think they probably will buy back their shorts here because of the parabolic wedge and because we're at support. We're at the bottom of a channel in the 60-minute chart. So I think odds are buyers below 12. Now, why is it bouncing right here? Probably too many buy limit orders at the 12 low, so too many people trying to buy. What about the limit order bulls 6? The bulls have bought the 6 low and bought more 1 or 2 points below. I think they will make money. While there's an open gap 4 and 8, it's not very big, and trends tend to weaken the longer they last, and therefore gaps tend to become smaller, and then eventually you get pullbacks below the breakout point. So it looks like we're going to go sideways to up for 5, maybe 10 bars here. What happens if 13 closes below its midpoint? Then I think the bulls will not buy below 12. Still probably buyers below. And this is probably a temporary pause to the selling. Ten-minute chart. Bull bar, a second leg. Well, we have a gap down and then a bull bar. Bear bar, bull bar, bear bar, bull bar. So it's a little bit of a parabolic wedge for a large high two, leg one, pullback, leg two. Very tight channel. So first reversal up, probably minor. Back to the 5-minute chart. Another low one, but 4 bars sideways and 3 pushes down, far below the moving average. I think a lot of traders will not take that sell. They'll look to sell higher. It's a low one short in a bear trend, but I think you're only selling that if you're putting a stop up here. Too much risk of the market doing this, going sideways a little bit. I talked about the low of last week, that the bears would like to get below it this week and turn this week into an outside down week. This is a major higher low, and if the bulls get below it, it knocks out the bull trend argument. Here's a 60-minute chart, major higher low. If you get below it, it's no longer a bull trend on this time frame. It's either a trading range or a bear trend. It can quickly become a bull trend again by reversing up, but at least at that moment, once it gets below that major higher low, it's either a bear trend or a trading range. Back to the 5-minute chart. We have a gap here, and we have a bigger gap here, but it's climactic, and that increases the chances of a pause trading range. You can redraw the wedge with 1, 2, 3. If bears did not get out above 11, if 15 closes on its high, I think the bears will get out and they'll wait to sell again. And bulls now have a higher probability buy than above 11 if 15 closes on its high. Minor reversal, right? The best the bulls probably will get is a trading range. If 15 is anything less than perfect, I think not worth buying. My short position, my puts and put spreads are back to break even right now. They were losers over the past couple of days on the bounce, but they're back to break even. Consecutive sell climaxes, but no sign of a bottom. You can see you can get a whole bunch of consecutive sell climaxes before you get any kind of a bounce. This is a pullback in a bull trend, so it was more likely to get some kind of a bounce. And this is not much of a consecutive sell climax. It looks again like a bull flag. This is more like today. Every bear bar is a breakout and a sell climax. And when you tend to get a series of them, 3, 4, 5, the market usually stops going down. Traders unwilling to sell low, and they wait to sell higher. So consecutive sell climaxes usually leads to some kind of a pullback or a trading range or a bounce. And that is likely today. If you're going to have a huge bear trend day, it usually does not come in the form of consecutive sell climaxes. Usually you get a reversal or at least a trading range when you get a series of sell climaxes like this. This is interesting. Ticks fell below minus 1,000, which is bearish in a bear trend. So usually the first reversal up is not the low of the day. What about buying on a stop above 16? I think the bears can buy if they want to get out, but for the bulls, a stop entry buy, I would wait for at least a micro double bottom, despite the consecutive sell climaxes and the parabolic wedge. You can see this is a very strong breakout, even below the bottom of the wedge. Increases the chances that we'll get a bounce, but very difficult to make money when the market has this many big bear bars, even though it's unsustainable, even though at some point, we're going to get a reversal. Is this the bottom? Is this the bottom? Is this the bottom? You keep losing money as it keeps going lower. Better to wait until you get some kind of a, double bottom or a final flag. And even then, the reversal up is probably going to be minor. By the close, bulls 15 made money. Bull scalpers buying the climax below the bottom of the wedge. Stop order bulls, I think it's, even though you get the parabolic wedge, I think it's probably better to wait to see if we start to go up. Would I sell the 16 high? No, I think the bears should get out above 16. Do I think there's going to be much more down? No. These climaxes are big, and this one's the biggest yet of the three, and therefore it's unlikely to go much more down. So we're probably doing this. We might be doing this, but more likely we're doing this. I would not. I would wait several bars before selling again. While we might get, one more little push down, we're probably not going to get much more down, and we probably will get up to the 11 high at some point over the next hour or two. And for the bulls buying, if you're buying, you probably need a wide stop, maybe a measured move down, just in case we get one more sell climax. Alternatively, you can just put a stop below 15 or 16. Who's going to sell below 17? I would not. I think the bears need to sell below a decent bear bar and probably after a low 2. Consecutive sell climaxes, the final one being especially big. This is probably the start of a minor reversal and a trading range. It's possible that it's the low of the day, but when you have a tight channel like this, the first reversal up is usually minor, which means the bulls will need a pullback 10 or 15 bars from now and an attempt at a major trend reversal. Kind of like this. First reversal up minor, you need a double bottom before you can go higher. Same here. Pretty tight channel, first reversal up minor, even though a lot of good bull bars, the bulls usually need a major trend reversal before they get a major reversal. So minor and then major. Minor reversal, major reversal. Bears got a profitable low 1, below 8, below 13, and they're hoping to get another one here, but this is different. We've had consecutive sell climaxes. We've had the biggest, strongest sell climax just now, 14-15, breaking below the bottom of the channel, and now we have 2 bull bars closing on their highs. We're still always in short, but a lot of the bears will wait for a second entry short. They'll look for 2 legs sideways to up after the parabolic wedge. The bears are hoping that we're at this point or this point and that we go lower, but we might be at this point. So because this is the biggest of the 3 sell climaxes and it broke below the bottom of the channel. So I would wait to sell even though we're still clearly always in short. Another sell climax, but every reversal is minor, bear flag or trading range. What about selling closes here? I would not. I think it's better to be selling pullbacks. I am back to flat. Remember I said over here that the ticks hit minus 1,000 and that usually will not be the low. So ticks hit minus 1,000. So this is probably not the low in price, and we have a new low in price and a higher low in ticks, but that is not enough of a reason to buy. I think this channel is minor. I'll get rid of that. 60-minute chart. This is the important price. That's a major higher low. And on the 60-minute chart, if the bears get below it, then it's no longer in a bull trend. It's either a trading range or a bear trend. You can see the low of last week is starting to come into view. Here's the weekly chart. Remember I said, I've been saying all week that this week might go outside down, which would increase the chances that the market has begun a pullback to the weekly moving average. For me, it's too climactic to be selling at the low. And for the bulls, I think they need a wide stop, and it's better to wait for the market to start to go sideways or up before buying. So what is causing the sell-off? Is it the price of avocados? I doubt it. Chipotle has been flirting with 300 for a couple of months, and terrible earnings, and we broke below, and they're blaming it on the price of avocados. Apple, Alphabet, Amazon, none of them is terrible. Facebook, Microsoft, Nvidia, Netflix, none of them is really terrible. Financials, outside down. JP Morgan, pretty tight channel, so usually will not become a big bear trend without first going sideways. Bank of America, Energy, ExxonMobil, not bad. So everything is down, but nothing looks terrible. Freeport, McMoran. You can see most of the stocks are down. AMD, Advanced Micro Devices. So it's a broad sell-off, right? Everything is down. What happens if we go outside down? It looks like we are going to go outside down on the weekly chart. I don't know if we get there today, but it looks like this week will go below last week's low. Usually when you go outside down, it does not go far below. But the context here is just so good for the bears. We're right at a measured move target. I think we got to within a couple ticks of the weekly measured move target. And we got above the daily measured move target and are reversing down. I can put that back in. For me, I find it tough to sell and hold short all day on a day like this, and that's why I like to buy puts and put spreads when I think the market might be setting up for a reversal. That way there, I don't have to worry about getting back in. So if I sell and I take profits, sell and take profits, sell and take profits, sometimes I don't get back in and I end up missing a lot of the trade. But by having the options on, here's the daily chart. I stand to make a pretty good profit. I'm expecting the market's coming back down here on the daily chart, which is about 100 points down. And that would be a pretty big profit. Here's the spider. So the corresponding point is somewhere in this general area. Can a trend like this last all day? That would be extremely rare. That would, qualify for a crash. Talking about 40 points, 50 points down. It's much more likely the consecutive sell climaxes will lead to exhaustion and a trading range. and the trading range could last all day. And then we're left with trend resumption or trend reversal after the trading range. And bulls are hoping that it's going to be a climactic reversal. Here, sell climaxes, yes, but no big reversal. This is comparable to today. I've updated some slides here, so I'm going to close this out and I'm going to reopen it. So I turn the screen off for a moment while I reopen it. I was checking to see if the two computers synced, and they have not yet. Probably buyers around last week's low. Whenever a higher time frame chart is trying to get an outside down bar, there are always buyers just above the low. And sometimes you get the outside down, and sometimes you get a big rally. So huge sell-off, trying to go outside down, and right above yesterday's low, we reversed up strongly. Same thing, collapsed, could not go outside down, could not get below yesterday's low, rallied strongly. Same thing here. And we're talking about the weekly chart. The bulls might try to do that, but who's going to buy? I'm not going to buy. We're right at the daily moving average, which is support. And it's a 20 gap bar buy. We've been above the daily moving average for more than 20 bars, but I would not buy because on the daily chart I would not buy because I think this is a consecutive top. Buy climax wedge, it failed, and now we have a bear IOI for a second attempt. And I believe we're coming down here, so I'm not willing to be buying. This is another example of one of those low risk trades where you buy at the market right above the important resistance, last week's low, and you put a stop a tick below, betting that we're going to form the low of the day somewhere above last week's low. The math is okay. Even if you're right only 30% of the time, here you're risking 2 points, hoping to make 8 or 10 points to the top of the most recent sell climax. Again, bears will get out above a bull bar. And can the bulls buy? Of all the buys today, this is the one that makes the most sense. But even then, it's better to wait to see if we start to get some bull bars and maybe a pullback. It's still probably a minor reversal. But as I said, a lot of times whenever a 5-minute chart is about to create an outside down bar on the daily, weekly, or monthly chart, there's very often a lot of buying right above the low, and a lot of times it's the low of the day. So this is possible. It's possible that this is the start of a, we're not going to get this, right? But we might get sideways to up for the next 2 or 3 hours. Can the bulls close it on its high? That would increase the chances that we've begun a minor reversal up. So I would get out of shorts above 23 and probably wait at least for a low 2 before thinking about selling again. And aggressive bulls can buy, but higher probability to wait to see if we start to reverse up strongly and then buy. Let me take a look at the tick chart. Okay, so higher lows in ticks, lower low in price. So fewer stocks are participating in the sell-off at this point, and that reduces the chances that will continue. Okay, low, low, low in price, and ticks are steadily forming higher lows as the price is falling. Volume does not look like much of a volume divergence. You know, we have a big volume here, less volume here, but about the same volume here, but definitely a tick divergence. And that means that fewer stocks are selling off, and that increases the chances that we'll get a bounce. At the top, you can see ticks hit 1,000, and then a little bit lower ticks, a little bit lower ticks. See the red line is descending, and the result of the tick divergence was a pullback, a reversal. There was no volume divergence. Volume was actually increasing at the top. This is at the bottom, the 1 minute chart, E-mini, ticks, and volume. And ticks hit minus 1,000, very over sold. And then price got a new low and another new low here. So price is going down, but the ticks are going up. I don't know if you can see that green line, and the volume is going down. So the total selling is getting less as price is going lower. And as the price is going lower, fewer stocks are going down. And at some point, theoretically, you run out of buyers. If it keeps going down and fewer stocks and less volume are taking place, there are no sellers, and the market has to go up to find sellers. Here, we got a big reversal. You know, do I think we'll get that? You know, who knows, right? Same thing here. Ticks hit minus 1,000, and then price got a little bit lower. Price is getting lower, and the tick lows are getting higher, and the volume is getting less. And it often leads to a reversal. Again, 1 minute chart, E-mini, and ticks and volume. Traders see 3 bull bars, it sold off, 2 bull bars, it sold off, 2 bull bars, it sold off. You know, so a lot of the bulls are hesitant to buy, but you know, I would not sell here. Each sell climax is getting bigger. You know, this, and then this is bigger, and then this is far bigger, and you know, it's really extreme behavior. A lot of the bears will look at this as a gift. Also, instead of collapsing below critical support, last week's low, we're reversing up from just above last week's low. And that is not good for the bears. They want, if the market's collapsing, they want it to get all the way through the support. They don't want it to bounce right above the support, because then traders wonder if that collapse is simply a sell vacuum test of the support, and the strong bulls have been wanting to buy all day, but they've been wanting to buy at this support level. That's what we're finding out now. Again, unlikely to go straight up. This is a reasonable low of the day, so it's an okay swing buy. But because the channel is so tight, the first reversal up probably will be minor. You know, you can see even here, big reversal up, but a pretty big pullback. Big reversal up, but a protracted pullback. And then a second leg up. And then second leg up. Consecutive sell climaxes. when it did reverse, we got pullbacks along the way. And the rally, even though it lasted hours, this is the prior day, and the rally lasted hours, it was not all that strong. Consecutive sell climax is a strong rally, but unable to become a big bull trend. This is like the prior two times. We had two bull bars, and then the bear trend resumed. Will that happen again this time? I don't know. This is so extreme, and it's right above a key price. I've been talking all week about the possibility of an outside down week, and when the bears finally get a chance to do it, it reverses up after the strongest sell-off. So that increases the chances that we're going to go sideways to up maybe for a couple of hours. We're also at the daily moving average, just a little bit above, and that 60-minute major higher low. So we're right at a major higher low on the 60-minute chart. It's also last week's low, but it's a major higher low. And the bulls are trying hard to prevent the market from falling below that major higher low. Bulls trying to get 3 consecutive bull bars. That will increase the chances that we'll get a couple legs up. The bears know that, and they're trying to prevent the bulls from getting 3 consecutive bear bars, because the bears want to get down below last week's low. Right now, I think it's more likely than not that we're going to go either sideways for 2 or 3 hours or sideways to up for 2 or 3 hours. And that's true even if we get below the low of the day and below last week's low. Consecutive sell climaxes, just way too extreme. The bears look at it as a gift. They take partial profits, and they'll wait for a couple legs up before looking to sell again. We have a gap below 15 and the top of the sell climax. Both are targets. So I think we're going to go higher. Probably always in long, strong enough reversal up, so probably buyers below bars and probably a second leg sideways to up. We'll probably start closing gaps below 15 and the target moving average and the top of the most recent sell climax. I'm saying that before the bar closes because I think it's going to have a bull body and it probably will close above its midpoint. Always in long, but a minor reversal, probably a bull leg in what will end up as a trading range. Will bears sell the close 25, betting that we'll get a pullback? They might. Usually if they're selling closes, they want to be selling the closes near the moving average. I think we're always in long, so selling closes is only a scalp, and I think it's better to be long or buying pullbacks, looking for at least a small second leg up. Minor reversals, so probably a trading range. I think the bears would like to sell a second leg up, not this first leg up. Now, always when bears get out above 23, and they have to sell again below a bear bar if the market's still always in short. I think the market's always in long, and therefore I think the always in bears do not sell below 26. If the bears get a micro double top, then they can sell. But right now, probably buyers below 26, buyers below 25, buyers below the low of the day, buyers below last week's low. Probably not going to be a big bull trend, probably the start of a trading range. And I don't know if the top of the trading range is here or here. I don't know if we're going to get a reversal day and go way, way up. Nobody knows at this point. Right now, it's a reversal, but the channel down is so tight, the first reversal up is probably minor. Reversal up, and the bulls needed a double bottom. Reversal up, not much of a sell-off, so not much of a reversal. Same here, sell-off is not all that big, but we got a huge rally out of it. This is more like today, stalled at the moving average, got a second leg up. I don't think we're going to do this. This was following a gap up. And today we had, we sold off from below yesterday's low. Again, this is not like today either, and I doubt we'll get that big of a reversal. Same thing here. Trading range, I doubt we'll get that. These are really not similar to today because today is so, maybe the bulls get this for the rest of the day. Strong sell-off. The bulls needed a double bottom. First reversal up, very strong, but minor. And then here we have a higher low, major trend reversal, and another one here. Where do the bulls come in? Do they buy the 26 low, or do they buy 1 or 2 points lower? Do they buy the test of the 23 buy signal bar high? All of those things, right? But anyone buying at a minimum has a stop below 23. Remember, it's still a minor reversal, even though I think we're always in long. So that means a trading range is more likely than a bull trend. But after we get a leg down in a trading range, then the bulls might get a major reversal, but the first reversal is minor, even if it's strong. You can see what happened there. You got buy the closed bulls 25, disappointed 27, and a lot of them placed limit orders to sell out at their original entry price, and that's why we turned down right here. It's still always in long, but remember, it could be a trading range instead of a bull trend. In fact, a trading range is more likely. I don't know where the top of the range is. It's probably somewhere up around here, but because it's probably a trading range, we could get a test all the way back down, so we could get a deep pullback and still be in the trading range, and get back up here later. So, I think the limit order bulls who bought for any reason, the close below, will make money if they put a stop down here and if they can scale in lower. But right now the market's deciding, is this the top of the range and will we trade down and then up, or are we going to go up a little bit further and then pull back? Right now it's more likely that there are buyers at the 26 low, and that will go up at least a little bit higher before we get a leg down. Remember what I said, that I think most traders see it as always in long, meaning they expect at least a second leg up. And therefore, the always in bears who got out above 23 are not going to be selling below 27, because they sell below 27 if they think it's still always in short. But I think most would conclude that it's now always in long. So they'll wait for a couple legs or a micro double top before they start to sell again. Can you buy again with a limit order here? I would wait to see if we get a stop order buy. And for the bears, is it always in short? I think they have to get below 23. As I said, I thought a trading range was more likely than a bull trend. And I also think a trading range is more likely than a strong bear breakout here. Can you argue it's a double top with 21 and 26? It might be. It might break below the neckline and fall for a measured move down. I still think it's more likely that we're in a trading range. What do the bears do? I thought they needed a second entry short, so I would not sell below 26 or 27. And for me, I think the bears are trapped out. If they get a strong breakout below the low of the day, maybe they sell closes again. But we're probably in the process of forming a trading range, and I think it's really difficult to sell down here. And for the bulls, they need to hold above 23, and they need a bull bar. But it's a big enough sell-off, so a lot of the bulls will wait for a micro double bottom here before buying again. For the bulls, higher, low, major trend reversal. Kind of like this. Minor reversal, but always in long, and therefore probably buyers below for at least a second leg sideways to up. And what we have today is similar to this. Big consecutive sell climaxes, strong reversal up. Big down, big up, big down, big up, confusion, so trading range likely. Location, good for the bulls, right? A double bottom and trying to, again, hold above last week's low, but they need a decent buy signal bar. We're testing support. The low of last week and the daily moving average. Since the trading range is more likely than a measured move down, this is a double top, maybe on a smaller time frame chart. Since the trading range is more likely, I'm not selling down here, so I'm trapped out, waiting to see if we get a double bottom with a decent buy signal bar for a buy. And even if we do, it probably is not going to be a big bull trend. It's a double bottom, major trend reversal, so comparable to this. This is a higher low, but it's still a type of a double bottom. A lot of bear bars, yet we still reversed up strongly. Bulls so far defending 23 low, which is theoretically where their stop is. But the sell-up is big enough so that if we do bounce, we're probably not going to go above the neckline of this double bottom. We're probably going to go sideways for a few hours. Limit order bulls who bought the 26 low, 25 close, 26 close are looking to scale in lower above a bull bar, and they want the second entry to be at least a couple points below the first. So if they buy that close, 25 close, and then they want to buy more above a bull bar, that's their entry, and that is their break-even price, but not a very good looking buy signal bar. I always pay attention to these second entries for the scale-in bulls, because a lot of times I'll take them if I think the setup is strong, thinking that we'll try to get back up to the first entry. But I don't like that tail there, so I do not have an order to buy, so I'm waiting. I debated buying VXX a few days ago and did not. When we had this reversal up, I thought about buying it, and I did not. You can see it's up $3, so that's $300 for every 100 shares. Daily chart, you can see we get these huge reversals, and this looks like it's the start of one, and this is where I thought about buying, and I did not take the buy. What do the 5-minute bears do? To me, I'm trapped out of the 5-minute shorts, and I'm not long. I would have bought above 32 if it was perfect, but it's not. And I'm not selling on a stop below the low of the day, even though that would make the market always in short again. You can see we're right at last week's low, on the verge of going outside down, but at support on the daily chart, right at the moving average. Good location for the bulls to buy. So you buy here, a tick or two above last week's low, put a stop 1 tick below, and take a chance that the bulls will hold. Maybe you have a 20 or 30% chance of success, but you're risking 2 or 3 ticks, and if you win, you'll probably make 5 or more points. So the math is very good, but you have to be willing to lose most of the time. And when you win, you have to be able to manage your winners correctly. You can't exit with a 1-point profit. You have to hold for as many points as you can get. Right now, we fell below 23, so this would then be a lower low major trend reversal if the bulls get the reversal. And a micro double bottom, probably a small wedge on a 1-minute chart. We went down, we went up, we went down, we went up, we went down, and the bulls are hoping to go up. But not a good buy signal bar, so right now I'm trapped out. Daily chart. If today closes down here, and if tomorrow is another big bear day, I think that would make the daily chart always in short. And it would make it likely that we're coming down to the key prices. I think the most important price is this one. The test of the breakout point. A major higher low and a major top. And therefore, and we tested the major top and reversed up sharply, just dipping a little bit below it. So this is a major price, and we're above it and reversing down. And this is a major price. Whenever you have a doji bar testing support, and the bar has a big tail on the bottom, and the bottom just goes a little bit below the support, usually the market has to come down and get that support again. So that's why I think we're coming down here in the next month or two. I don't know what the reason is for the sell-off. I mean, I know it's purely technical, but there's always a catalyst in the news, and I don't know if the catalyst is Trump's tax plan. He wants to get rid of the state tax deduction. I live in California, and I pay a lot of taxes, and my what I pay in state taxes is deducted from my income, and I do not pay federal taxes on it. And the Republicans want me to pay double tax. They want me to pay my California tax, and they want to tax me on the tax that I pay to California. And they want to do the same in New York and some other Democratic states. And there probably are enough Republicans in those states to block that, which could block Trump's tax reform. And that might be what's going on here. That there's a fear that tax reform might stall over what I think is unfair. I pay California tax, and then Trump wants to tax that tax that I pay. Let me turn this into a 15-minute chart. Well, that's not really a major low. I'll get rid of that. I don't want too many lines on the chart. This is the next major higher low. Strong breakout to new high. 60-minute chart. The bears need to break below here and below here, and then they can try to get a measured move down. It gets them into the neighborhood of this price, which is where I think we're headed. I'm trapped out, except for my puts and put spreads on the 5-minute chart. I'm trapped out. I have a profit now in my puts and put spreads. And a lot of times when I get a gift, I take the profit or take partial profits, but I don't have very much profit, and the profit potential is still excellent. Let me put up the spider chart. All right, so I have a profit on my puts and put spreads. I scaled in, and I think we're coming down here, and therefore, I stand to make a much bigger profit, so I don't want to take my profits too soon. Is this still a lower low major trend reversal, or is this channel too tight? I think the channel is too tight. So yes, it's a lower low major trend reversal, but unless 35 is an exceptional buy signal bar, a lot of traders will wait for at least a micro double bottom. We're always in short, but I think very difficult to sell down here. This is a 4-hour chart. Here's that other low. Anyway, you can see why I put the puts on, because when you get these climactic sell-offs, I think it's difficult to sell and difficult to hold short once you do sell. I don't care what 36 looks like. Excuse me, I don't care what 36 looks like. It's a 12 bar or 11 bar bear micro channel and a bear trend, so I'm not going to buy above it. We should stabilize here because we're at the daily moving average. 60-minute chart, daily moving average, and then this major higher low, and near that one, another low one short, but the bottom of a sell climax. So I'm going to wait. 12 bar bear micro channel, micro double bottom, good. Probably get some kind of reversal up from below last week's low, good. But a 12 bar bear micro channel, I think, makes it not a very good buy. We're at support, the daily moving average between two major higher lows on the 60-minute chart, so good support. Broke below the bottom of this channel. We should get back above last week's low, because that's what typically happens when you fall below a major price on a higher time frame chart. The market usually gets back above it on the 5-minute chart, and then later on tries to get back below it again. We got exactly up to the 16 low, and usually the next pullback goes above the breakout point, so odds are we're going above the 23 low. But I don't know if we go up there first reversal or if we need a second reversal up. Always in short, but stop all the way up here. I would get out of shorts above 37 and look to put them on again below a bear bar. And for the bulls, a micro double bottom, big sell climax, but a 12 bar, 13 bar bear micro channel, so not a very good buy. We should get back above last week's low, probably within the next 5 or 10 bars, but not a good buy setup. I want to take a look at this measured move. Even though it's not a very good looking double top, 21 and 26, it's a breakout and it could function like a double top, and a lot of times it'll get down to the measured move target, and that will be the low of the day or the low of the next few hours. We're not quite there. Trying to get back above last week's low and above the 23 low. Bears want at least a little bit more down to the measured move. I don't know that they'll get it. We're so oversold. A lot of the bears want to sell higher. And bulls buying here. If you take it, I would not put my stop below 37. I would use a wider stop. Might get one more push down, 1, 2, 3, but probably not much more down before we start to enter a trading range. The bulls tried here and were unable, and so they'll try again here or with one more push down. A micro double top, 36, 38, but a doji bar. Not a lot of bears willing to take that short. This is the kind of thing that I'm talking about when you have a strong breakout and a bear trend. Here's a double top. It's more obvious than today. A lot of times you'll go down to a measured move, and then that's the low of the day. And that's comparable to what we have here. Not really an obvious double top here on this time frame, but we're near the measured move. We might have to get a little bit lower, but a lot of times that becomes the low of the day. Double top, not clearly a double top, fell for around a measured move. We have another one here, and we got some bounce at the measured move, but we continued down. Double top, fell for about a measured move, got a bounce. Strong rally, broke below it for about a measured move, and then got a bounce. Strong rally, double top, did not quite get to a measured move, ran out of time. Strong rally, double top, break below the neckline. I don't have the measured move drawn in. I'll try to make this more accurate. Okay, those prices are right. So that's about right. I think a lot of the bears will not sell below 39. This is so climactic that the odds favor some kind of a bounce. And the bulls probably will scalp. Obvious targets, 23 low. I think it's important. 26 got right to the 16 low. If you then get a new breakout to a new low, the market usually gets above that breakout point on the reversal up, at least one tick above. So the scale in bulls who buy the 23 low and lower are usually able to make money. So this should get at least one tick above that 23 low. Just like here, minor reversal and but possible low of the day. I think we're always in long again, just like here. What about the bears selling below a bear bar? I would not. This is so extremely oversold that I think a lot of the bears will want some kind of a second entry short. Here they did not get one. And it's difficult to sell closes 30 with that big tail. And you break below on 33 to a new low, but by the time it's sell to close, it's so climactic that a lot of traders are not selling down there. Okay, minimum goal reached, one tick above 23 low. So you'll get some bulls taking profits. Bulls who bought the 23 low and bought more lower, 1, 2, 3, 4 points lower, or they bought above the bull bar, looking for at least a couple points up, which they got. Well, what do you do? I think we're always in long, so I would not sell below 40. But I also think it's a bull leg and what will end up as a trading range. And therefore, most of the bulls are scalping. Will they buy the 40 low? Well, it's similar to buying the 26 low, so it's not a great trade. Bulls need to break strongly above the moving average. We can get, as I said, when you get these double bottoms, you can get a very strong reversal, and there's a decent chance you get the low of the day. Maybe 40% chance, 50% chance if it gets down to the measured move. Here, double top bear flag, measured move. Maybe 40 or 50% chance it's the low of the day. Well, it was not. The second one ended up as the low of the day. The bulls got a bounce, but did not remain the low of the day. Measured move, a bounce. Measured move, a bounce. Not enough time left for a reversal. Same with there. I think most of the bulls are scalping for a couple points. I bought here, I'm flat. Possible low of the day. I thought we were going to get 2 legs up here, but we never got another buy. Moving average. We've had gaps between the high of the bar and the moving average. Every bar for 40 bars. The bears are so eager to sell, they've been selling below the moving average, the average price, and now they're finally getting a chance to sell at the average price, so some bears will take it. I think we're always in long, so I don't want to be selling. I'd rather buy a pullback. Daily moving average at last week's low. I think major support. That does not mean bull trend. It just means the bears might take profits. We've had so many reversals over this entire bull trend. Every one of these tails is a reversal, and the bulls are trying to get another one here. We've had a lot of bear bars. Here's one here, but look what followed. Here's one, look what followed. Here's one, look what followed. Here, terrible follow through, big bear bar reversal. Everyone is aware of that, and that lowers the probability for the bears, and that's why I keep saying the bears need consecutive big bear bars, because if you just get one big bear bar like this, bulls are going to buy it. They just look back to see what happened after every other big bear bar. 1, 2, 3, 4, 5, 6, 7, right? Every other big bear bar, the smart thing was to buy the close of the bear bar. And therefore the bulls will buy. Also, it's a 20 gap bar buy on the daily chart, so they'll buy as well. The bears need 1 or 2 more big bear bars to make everyone believe that they have taken control. They have not taken control yet. Bears will sell because of the 20 gap bar short, but now the bears are the scalpers. Here and here, the bulls were the scalpers. Now we're always in long, so the bears are the scalpers, and higher probability to look to buy a pullback. We got 2 legs up, deep pullback, but it remained the low of the day. Here we just went up in a fairly tight channel. It's a lower low, but because of the 14 bar bear microchannel, I think it's probably a minor low, not a lower low major trend reversal. It's probably a minor low, which means even though this is a strong minor reversal up, it's still a minor reversal. The bulls might be able to get a higher low major trend reversal. We have a minor lower low, but a strong reversal up, so maybe the bulls will get a higher low major trend reversal. Minor reversal, but strong, so the bulls look to buy a higher low major trend reversal. Same thing here, very tight channel. So first reversal up, minor, very strong minor, and therefore traders will look for a higher low major trend reversal, which they got. here. Not really a very good looking lower low major trend reversal, but it did lead to a major reversal, and the higher low is not enough bars for a higher low major trend reversal. So not a good lower low, not a good higher low yet. It became a major reversal. This is similar to today. Is it a lower low? This is a better lower low than today because the sell-off is just 6 bars, whereas today we had a 14 bar bear microchannel. Strong reversal up, but minor, and therefore the bulls look to buy a higher low and hope for a major. Same thing here. Strong reversal up, but the first reversal in a strong bear trend, minor. The bulls usually need a higher low before they can get a rally. And same thing here. This is a strong minor reversal, but it's strong enough so that we've probably seen the low of the day, and therefore if the bulls get a major reversal, it probably will be from a higher low. So I don't know where the higher low will be. I don't know if we go up higher here to this high and then pull back and form a higher low at the moving average up here and then a higher low over here, left shoulder head, right shoulder, or if right here we pull back and get the higher low. In any case, we're, I think, always in long, so probably buyers below 42. Bears trying to duplicate this. They want to get a bear Barty 43, and then they hope for a sell-off to a new low, but I think the odds are against it. Theoretically, you still have buy the closed bulls 25 or 26, buying more above a bull bar here. Let me zoom in on that. So this is strong enough so they think we'll come back up here even if we sell off to a new low. So they buy that close, 25 close, and then they buy more above a bull bar right here. And this is their average entry price. As long as it gets one tick above that price, they can get out and avoid a loss. So they buy here, they buy more here. This is their average price. If they get out here, they avoid a loss. And some of the selling is because a lot of these bulls were so disappointed by the size of this sell-off that they're happy just to get out without a loss and not worry about making a profit. They'll try to make a profit if we get maybe a higher or low major trend reversal. Again, this is trying to repeat this, but I think I thought it was unlikely that we would get this, but we did. I think it's more unlikely that we'll get it again. So I think right now I would say at least 50% chance we've seen the low of the day or the low of the next, well, probably, I would say at least 50% chance we've seen the low of the day. And obviously 90% chance we've seen the high of the day. %50 pullback right around the low of last week, which is also a magnet, and it's also around the daily moving average. So this might be where the bulls come back in. Suppose we get 3 bear bars. Is it always in short? No, I think it's probably always in long unless we break below 37. And even if we do break below 37, I think probably buyers below, just like the limit order bulls who bought below 23 made money. More likely we're going to form a higher low somewhere in the middle of this bull leg. A lot of the bulls want to buy, but they want to buy lower. And 44 is only a 2-bar pullback, and therefore probably not enough bars for a higher low major trend reversal. But sometimes, as I said, you can just go straight up with the major trend reversals, and you never really get a convincing higher low. like this, where it just goes straight up, and only a 2-bar pullback, only 3 or 4 bar pause, yet it just kept going higher. After a sell climax, right, and lower low, not really all that clear. In this case, you look back and say that's not really a convincing higher low, so maybe this is a better lower low. I don't know. All I know is it just kept going up. You can see it's similar to this. Reversal, bear bar, reversal, bear bar, went below the bear bar, went below the bear bar, and here it kept going up. Next target is that 26 high. Remember, you have buy the close bulls who bought the 25 or 26 close. We're getting a strong enough reversal so that we'll probably get up there. I don't know if we'll pull back first, but I think that's where the market is headed. Not a lot of downside risk. And right now, probably 70% chance we've seen the low of the day and 90% chance we've seen the high of the day. We're so close to the target that a lot of the bears are hesitant to short because they believe we're getting up to the 25 close. If the bears sell, it's a scalp. Maybe they put their stop above 46. They may have to put their stop a few ticks above 26. And for the bulls, if they're buying, their stop is all the way down here. I think we're always in long. That means I think there are buyers below. I just don't know if they're here or down at last week's low. Trading range likely, more likely than a big bull trend, and therefore traders want to sell high, but they like to see some selling pressure or more selling pressure before they sell. Limit order bears who sold the 42 high and 1 point higher made money. So limit order bears are starting to make money. That increases the chances that this will start to evolve into a trading range. I talked about gaps between the moving average and the highs of these bars. There's now a gap between the moving average and the low of that bar. This is a moving average gap bar. The first time in a bear trend where you have a bull bar, you have a bar completely above the moving average, a gap. When you get a gap bar, it often leads to a resumption of the bear trend. But if it does, it usually leads to the final leg of the bear trend before the market gets a major trend reversal. So it's a swing short, but it's probably going to lead to a major trend reversal. Because I think we've seen the low of the day. If it does form a major trend reversal, it probably will be a higher low. Sometimes the first gap bar does not lead to the sell-off. Sometimes you need a second one. I don't know if I have any samples of that. Bear trend, and now we have gaps below the lows of the bars and the moving average, led to a sell-off, and the sell-off became the final leg of the bear trend, higher low major trend reversal. Gap bars in a bear trend, very strong reversal, yet led to another leg down. Ran out of time before the bulls could get a major trend reversal. Bear trend, gap bar. Here we got trend resumption down, never got the major trend reversal. This is what is likely today, so I don't know if we'll come this far down, but the gap bar that we have today probably will lead to a higher low major trend reversal. Bulls are hoping that it's just another one tick pullback or 1 bar pullback, 1 or 2 bar pullback, 1 or 2 bar pullback. We have an obvious magnet. It's not really there. It's the magnet is the close of 25. By the maybe the bulls will buy maybe they bought the low of 26. Some bought the close of 25, the close of 26, the low of 26. So these scale-in bulls buy more above the bull bar here, and they're holding, looking to sell when the market gets back up to their original price up here. So somewhere around here, low of 26, close of 26, there's a magnet. I'll put it over here at the low of 26. But this general area between this line and that line, there are a lot of bulls looking to sell. Bar 48, the close of the 4th hour. And the bulls hoping to get a good looking bull bar. But after 3 big bear bars, not a lot of bulls will buy above the high. They're hoping it's a failed breakout below this low and a reversal at the daily moving average, but probably sellers above after 3 big bear bars. Three consecutive bear bars, but I still think it's always in long. We have a strong minor reversal, and we have an important magnet just above. While always in long, the 3 bear bars might make sellers above, so we may have to go sideways here. So maybe it's sellers above and then another small leg sideways to down. Stop for the bulls all the way down here. So not a great buy, even though there's a magnet there. Always in long. I'm not taking this short, but I did not buy here. I did sell for a scalp up here, but I'm back to flat, and I'm looking to buy 3 bear bars. I'll probably wait for the market to go sideways and form maybe a micro double bottom over the next few bars before looking to buy again. Will we get selling in this area? We probably will. Less likely we'll reverse up strongly all the way up to that daily measured move target. More likely this is going to be a trading range with sellers somewhere in this general area. Bulls who sold here were very worried about the size of that sell-off. They bought more here, and they'll be very happy to get out without a loss. So you'll probably have bulls selling here. Looks like we're going up here. Next stop for the bulls would be a 50% retracement, a little bit higher. Unlikely to retrace much more than that. It's always possible that we could end up closing near the high, but when the sell-off is this big, I think that's unlikely. So we'll probably close in the middle or lower half. Three strong bull bars, so a lot of bears are not willing to sell yet. We're in the sell zone, but we got 3 pretty good bull bars. Because we're in the sell zone, even though this is strongly up, a lot of traders are not going to buy closes. If they do, stop below 48. You have limit order bears 46 high, and we have a gap. I think they'll probably make money, but with the 3 good bull bars here, the bulls might get a small second leg up. We're in the sell zone. By the close bulls 25, 26 are relieved to be able to get out without a loss. So part of that tail is from these bulls selling. Some of them scaled in, bought more here, and both types of the bulls, the ones who just bought and held, and the bulls who bought and bought more, are selling here. You have buy the close bulls here, but we're right at an important resistance level. So I think a lot of bulls would rather buy a pullback. You can see on, let me just find it. Sometimes you get reversals where there's just never a pullback or much of a pullback like this. And this is what the bulls are hoping will happen, that we just keep going straight up like this. More likely we'll get a pullback because we're in a reasonable sell area. I don't know if it'll become always in short again today, but we may, get a pullback. Let's say we get a pullback down here, then a higher low major trend reversal, head and shoulders bottom, left shoulder, head, and then right shoulder. Not a great sell after 5 or 6 bull bars, but not a lot of buyers up here. We're in a reasonable sell zone where bulls take profits. Bears want to sell, but with 5 or 6 bull bars, a lot of the bears want the market to go sideways for a bar or two before they sell. Buy the close, but a lot of bulls want to buy pullbacks. We're right around the 50% retracement of the sell-off, and we're around where the buy the close scale in bulls are selling. So not a great location to buy. We could go a lot higher, but not likely. With 6 consecutive bear bars, 6 consecutive bull bars, we're probably not going to go much lower over the next several bars either. So the best the bears probably will get is a tight trading range, maybe a pullback to the moving average. Being in the sell zone is not enough reason to sell. You need the market to start going sideways, which it's not doing. Still by the close, but we're getting late and we're in a sell zone. So pretty tricky to manage if you're buying that close. You can see on the daily chart how we've reversed a lot of the sell-off. We're back to around the middle of the day's range. That might be the magnet for the remainder of the day, the midpoint of the day's range. Here's the high, and there's the low, and we're right around the midpoint right now. At some point, bulls stop buying, and I think we're at that point. With 8 consecutive bull bars, the bears are not eager to sell, and therefore we're probably going to start to go sideways here. I think we're going to test down to last week's low again before the end of the week, and on Friday that will be the most important price. The bears will want an outside down bar on the weekly chart with a close below last week's low, and the bulls will want the close above last week's low. Daily chart, the bears accomplished a lot. They got below last week's low, but look at the big tail and the 20 gap bar buy on the daily chart, and that increases the chances that we go sideways for the next couple of days, and then on Friday decide whether to close above or below last week's low. High one buy, but buy climax in the sell zone and a bear bar, so not a strong buy at 57, probably sellers above 57 or 56, and most bulls would rather buy a pullback. I did not mention that seasonally there's a little window here when the market tends to be bullish. I think it's October 26th, tomorrow, until November 5th. The market usually is higher on November 5th than it closed on October 26th. So for the next week, there's a slightly bullish tendency. I never trade on calendar trades because I think they're so unreliable. But historically, if you test it, this the end of October, beginning of November, historically has has a high probability of trending up. Sometimes when you go upside down, like we did today, we then go back above yesterday's high. Right now it does not look likely, but that's something to keep in mind, that outside down, and at the end of the week we could close back above last week's high, and that would be bullish. High one in a tight bull channel, but a bear bar and climactic and in the sell zone. So not a lot of bulls selling, not a lot of bulls buying here. Bears might sell here, but when a channel is that tight, the downside is limited. Probably the best the bears get is a tight trading range to the moving average. Not a lot of buyers up here. Not a lot of buyers up here. We're still always in long. The downside is limited. Look how tight this channel is. However, the best the bears can hope for is a tight range, not much of a pullback. You have limit order bears maybe who sold the 46 high. I don't know. I would not have. And they're hoping to get out without a loss. Now, we broke below yesterday's low, way up here, to trigger the sell signal on the daily chart. We went below last week's low as well and reversed up strongly. While it's possible that we get all the way back up to yesterday's low, I think the odds are against it. I think we'll probably start to go sideways and probably close somewhere in the middle of the day's range. You can see the daily chart. We could get all the way back up above yesterday's high, and this could be a huge reversal day, but more likely we'll close somewhere in the middle. That would be a lot of points to cover. If you go down 25 points, going up 25 points is unusual. Limit order bears selling above 56, above 57, probably will make a scalp. But I think the downside is limited. We're far above the moving average. We've gone up in a very tight channel for about 12 bars, 13 bars. Probably will pull back by going sideways or down to the moving average. A lot of the bulls are unwilling to buy up here. We may simply go sideways for the remainder of the day and close somewhere in the middle of the day's range. So the daily chart will have a big tail and a big bear body, but close somewhere in the middle. limit limit order bears made money, but I think a lot of traders will not take the stop entry sell below 60. It's possible that it'll be the opposite of this 14 bar bear micro channel, big rally, and here we have a 13 or 14 bar bull micro channel, maybe big sell-off. I don't think so. I think more likely sideways. And most of the bears who sold will scalp. They sold the 57 high, 56 high, sold 1 point higher, and they just bought back their shorts. So bears buying will probably limit the downside. The bulls know they have an unusual number of bars in their rally, and they'll look to buy near support. This was resistance, and now it's support. Also, it's right around the moving average. So a lot of the bulls will look to buy somewhere down here, and most of the bears selling will scalp. Just like there should have been sellers here, and there were not, there probably will be buyers around here. And the downside here is probably not going to be great. As I said, I think we're going to close around the middle of the day. So we'll probably go sideways for the remainder of the day around this line and around the 50% pullback. I don't have it drawn in exactly, but that's around where it is. You have limit order bears who sold around the 26 close. They sold more below 60, and they'll probably make money, just like the limit order bulls who bought the 26 close and bought more above here made money. And probably we'll start, I think we'll end up going sideways right around the 26 high for the remainder of the day. I did sell the 57 high, but I'm already out. It's interesting, in GE the other day, I talked about how the bulls got a big reversal on bad earnings, and I thought I might buy calls if it went sideways and stabilized, and instead we sold off further, so I ended up not buying calls, and I also do not own puts. But it's really interesting that such an important big company is selling off like this. Here's the monthly chart. You know, all the other stocks are up here, you know, and GE is reversing down strongly, losing, you know, a third of its value over the past year, past 2 years when everything else is going up. You know, do I think GE will go out of business? No, they have too many valuable products, but it's really fascinating that they're selling off so much when everything else is going up. Honeywell is a comparable company, a conglomerate, and this is Honeywell. Three bear bars, so probably a second leg down. We had three bear bars here. I thought we were going to go sideways. I thought we were going to go up here, but I thought we might go sideways first. Here we have three bear bars in the market. The bulls have achieved every reasonable objective, and now I think there probably will be sellers above 62 or 63. However, I don't think we're going to go down much. This is such a big reversal. It's big down, big up, big confusion, and trading range likely, and an obvious area for the trading range would be around the midpoint of the day's range, which is right here. And it's around this gap. So will bulls buy above 63? I don't care what 63 looks like. The odds are there'll be sellers above 63, above 62, above 60, and we'll probably go sideways. I understand this is a 14 bar or whatever, 14 bar bull micro channel, 13 bar bull micro channel, which is very strong. However, the reversal down is big enough so that we're probably going to go sideways, maybe for the rest of the day. Most of the bears who sold that 62 close will scalp. Also, we're probably around a magnet where the day will end up closing somewhere right around these two red lines here or here. What about the limit order bears 46 high? Well, if we get there, there probably will be buyers there. So you have the limit order bears selling that high and then selling more below the bear bar. So they sell at this high, get filled here. They sell more below a bear bar and get filled there. And we're already at the average entry price. So they could buy back their shorts here and avoid a loss on the trade. Some are holding for the market to get down here. They then get out break even at their first sell and with a profit on their second sell. So there should be bears buying here. Also, it looks like we're probably going to oscillate around here or here. If we oscillate around the 50% pullback, right, we went this far above it, and therefore there's support that far below it, and it corresponds to around the 46 high. So this is probably the trading range for the remainder of the day. You only sell the 64 high if you have a stop above 60. We're probably entering a tight trading range for the remainder of the day. The bulls want one more leg up, so 1 pullback, 2 pullback, 3 to a big wedge. But these 4 bear bars, I think, make that unlikely. Makes it more likely that we've entered a tight trading range. %50 pullback right there. So probably sellers around there. Again, the bulls are hoping for one more new high. They don't care if it results in a wedge. They just keep wanting new highs. Do I still think we'll form a lower high? I think we're in a trading range. We may go a little bit above this, but I think we're probably not going much above it. And I think we're not going to get all the way back to the high of the day. And we're probably not going to get back above yesterday's low. Remember, daily chart, IOI, yesterday a sell signal bar, and we fell far below yesterday's low, triggering the sell. The bulls would like to get back above yesterday's low, but not likely. That's a lot of points remaining for 1 hour. More likely this is going to start to go sideways. Still always in long, and the bulls want another higher high. I think it's more likely that we're going to stay around the 50% pullback for the remainder of the day. So we're probably in a fairly tight range for the rest of the day. For the bears, a lower high. Is it a major trend reversal? Probably not. Not enough bars. Only 5 bars down, 7 bars up. Usually when the pattern does not have too many bars, any reversal is minor, which is consistent with what I think. I think we're in a trading range. Whether or not we go above the 60 high, I think we'll probably stay in a trading range for the remainder of the day. Can they get all the way back above yesterday's low? The momentum is certainly good, but I think probably not, because it would have to get above the 60-minute moving average as well, and that's another significant resistance level. 60-minute chart. You can call it an expanding triangle, down, up, down, and a very good reversal for the bulls, but about a 50% pullback and still below the 60-minute moving average. The day to be selling with limit orders. I don't know if the bears will get a stop order short. This is a pretty tight channel, and we're still always in long. And a lot of the bulls do not want to buy up here. A lot of the bulls who bought scalped, betting on the trading range. I am flat. I'm not buying here, even though it's a strong reversal up. We have a wedge top and we have a lot of resistance just above. And I cannot sell because I'm not going to sell with limit orders this late in the day, in the final hour. And there's no good stop orders short. So right now I'm waiting. If this were earlier in the day, I would sell the 60 high and look to scale in higher. But I don't like to trade with limit orders at the end of the day. A high one, strong rally, but third push up and a bear bar. Not many traders will take that buy. It's similar to 57, probably sellers above, but a little bit dangerous selling with limit orders late in the day because the market can go against you 1 bar, 2 bars, 3 bars, 4 bars, and before you have a chance to get out with a profit, the day ends and you end up with a loss. Here's that 50% level. Do I still think it's a magnet? I think it is in the midpoint of the day's range. The two choices right now are the bulls trying to close up near the high, which is further away, or the bears trying to get down to the midpoint of the day's range, which is closer. So I think it's more likely that we'll get there. Here's the midpoint. We don't have to do either one. Here's yesterday's low. Here's the midpoint of the day's range. Those, I think, are the two targets. We're at the target, the midpoint of the day's range. We have a wedge top, or a wedge bear flag, and that means we might get a big swing down, but not likely. The reversal up was so strong. Probably the best the bears get is a trading range around the midpoint of the day's range. So I thought we were going to enter a tight trading range somewhere in here. And I thought we might go a little bit above. I didn't know if we'd go above or below, but I thought we'd stop or settle in right around the midpoint of the day's range. Wedge top, 2 legs sideways to down. Not enough time left today to get the 2 legs down. So even if we get 2 legs down today, it probably will be the first of a complex, bigger 2 legs down. Normally, when you get a wedge and you get a reversal down from the wedge, the number of bars in the reversal is about half as many bars as in the wedge. And the wedge has about 50 bars. So the 2-legged correction should have 20 bars or so, 25 bars, which we do not have time to get today. We went a few points above the midpoint. We might go a few points below, but I doubt we'll go much more than a few points below. The market often has symmetry at the end of the day around an important price. We went that far above it. If we get that far below it, probably buyers who will probably get back near it. If it was earlier in the day, that would be a buy at the 64 low limit order, looking for a scalp, a magnet above the midpoint of the day's range. Trading range likely. They sold above a prior high. They'll probably buy below a prior low. Fairly clear wedge, strong first leg down, therefore probably sellers above 77 for at least a second leg sideways to down. So I would not buy above 77 no matter what it looks like. What an interesting day in so many ways. On the weekly chart, we went outside down. The week is not all that big, but it's still outside down. We went outside down here, did not matter. We kept going up. Outside down here, went down a little bit further. Outside down here, went up. So, outside down in and of itself does not mean much. Like any kind of a sell setup, you need good follow through. And that means we need next week to be a big bear week as well. However, as I said, we have a little odd thing coming up here. Last week of October, first week of November has a bullish tendency. So it's a pretty dependable bullish tendency. So it reduces the chances that next week will be a big bear week. Anyway, we triggered the sell by going below last week's low. On the daily chart, we had a bear IOI, but a doji bar, and that is a weaker sell signal bar, and it made it likely that there'd be more buyers than sellers below yesterday's low. However, did not matter. We sold off strongly to it, strongly below it. And then what happened at the daily moving average? The bulls came in. We have a 20 gap bar buy. We have not touched the daily moving average since back here, so about 40 bars. And you can see that when we got to the daily moving average, the bulls bought strongly. 60-minute chart, we broke below this low, a major higher low in a bull trend. And when the market breaks below a major higher low, it's no longer in a bull trend. It's then either in a bear trend or a trading range. Way back here, I said this rally looked like a bull leg in a trading range, and that it'll have to come back down here. We tried here, we got better, closer to it here, and I said the entire thing is a bull leg in a trading range. It'll be followed by a bear leg in a trading range, and then we'll probably be in a trading range, which is what we are. If you break below a major higher low like this, but reverse up strongly, the market goes back to being in a bull trend. The bulls are trying to reverse this up strongly, but they have not done enough yet. They probably need another one or two big bull bars to totally reverse the sell-off from earlier today. The bears are hoping that this is a pullback from the breakout below the bear channel. Let me get rid of that top of the channel. And it's interesting that that measured move on the daily chart looks to be very important. We stalled at it here. We broke a little bit above it, reversed down. We went above it, tested it here, and broke below it, and we're back to it again. So it looks like that's an important price. So daily chart, bear IOI, sell signal, but terrible entry bar. And weekly chart, outside down, but the week has not closed. We still have a couple days left, and the bears want the week to close below last week's low, and the bulls want the week to close well above last week's low, and they prefer to get it to close above the midpoint of the week. Now, it's hard to see the bars because of how big the range is. It's a 30-point range, so it makes it hard to see. But let me try it like this. We had that sell-off yesterday at the end of the day. And then today, we had a small gap down, and I said that yesterday's low was a sell signal, and we opened exactly at yesterday's low. We bounced off yesterday's low, and the bulls tried to create a double bottom, but because it's an IOI, a buy signal and a sell signal, and we're right near the sell signal, the low of yesterday, I thought it was likely we would trade below. And bar 2, bar 3, bar 4 all traded below, but did not break out strongly. It made me think we might bounce. And then bar 5, we had a big bear bar closing on its low. That clearly made it always in short. At that point, I did not know if we would simply get 2 legs down, 1 pull back 2, and then a reversal up, or get a bear trend. And we ended up with a bear trend. However, it still ended up as a big 2 legs down, 1 pull back 2. So on the 60-minute chart, it's a big high 2 buy. Became clearly always in short on 5, probably sellers above 6. And then the bulls had 3 consecutive bull bars, 6, 7, 8. It's a low 1 short, a pullback from the breakout 5, the breakout below yesterday's low, closing the gap on the daily chart. But 3 bull bars, a lot of bears will not sell below 8. And then the 8 high was exactly at the 4 low, or just below it. And that's a warning that we have a gap and we may go lower. A pair of bear bars, 9 and 10, strong enough so that we'll probably get at least a small second leg down. A decent bull bar on 9, possible parabolic wedge, reversed up on 1, reversed up on 6, trying to reverse up on 11 as well. But with the 2 big bear bars and the small bull body on 11, a lot of traders will not take that buy. Always in bears, they might get out. It's okay to get out, but if they do, they got to sell again below a bear bar, 13 or 14. Another bear breakout, 13, 14, pretty big bear breakout. So another parabolic wedge, this time with 5, 10, and 15, and a decent bull bar. But is that enough to cause a reversal up? I don't know. I think it's okay for the bears to get out. The bulls probably will not take that buy. But if the bears do get out, they got to sell again below a bear bar, 18, and that's hard to do. And then an even bigger sell climax down to 22. And again, another parabolic wedge. This is so extreme. Plus we have consecutive sell climaxes. This is the 4th one. If you count the gap, it's the 5th one on the day. And that's getting unusual. And that increases the chances of a reversal. However, the first reversal is going to be minor. When you have a very tight channel like this, even if you get a strong reversal, it's minor. And usually, sometimes it can be major, but usually it's minor, which means the best the bears get is the trading range, and the best the bulls get is the trading range. And because of that, most of the bulls scalp. And the range is big enough, they're going to be scalping for 2, 3, or 4 points, not 1 or 2 points. I thought there'd be buyers below 26, and then we had that bear bar 27, and that disappointed the bulls. And then 28 hit the 25 close and got a tail on top. And that told me that a lot of the bulls who bought the 25 close were disappointed at 27, and they tried to get out even, break even 28, and could not. And then the bulls gave up on 29 or 30. I thought we were still always in long until we broke below 23, which was on 33, and that's not a very good looking entry bar for the bears selling the breakout. While, obviously we're going lower, we just went below last week's low on 34. Whenever you see this many consecutive sell climaxes, 4 or 5 consecutive sell climaxes, the odds are you're going to get, it's climactic. The selling is going to stop. And when the selling stops, either of 2 things happen. Either you go sideways into a trading range or you go up. And today we went up. We had a 14 bar bull micro channel, 37, but a bull bar, not a strong buy, but an okay buy, looking for a test up at a minimum to the 23 low, maybe all the way up to the 25 close. And we went far beyond that. Market went always in long, either on 39 or on 41. And it's similar to this, a minor reversal that's strong, probably buyers below 26. And then we got a bear bar, a minor reversal that's strong. And then we got a bear bar 43. I would not sell this. I think this is possibly a lower low major trend reversal. Usually not if you're in a 14 bar bear market channel. Usually you'll end up needing a higher low major trend reversal. 44, not enough bars for a major trend reversal. 48, you can argue it's a double bottom, higher low major trend reversal, but still probably not. And therefore this entire rally is probably the first leg up of a reversal that's looking for a higher low major trend reversal. Is 64 the higher low major trend reversal? Again, it's only 5 bars down. And what about this 64, 77? You know, you got a double bottom, higher low major trend reversal. It might be a major reversal. I still think we're probably going to have to test down here and get a bigger major trend reversal. So bear trend, this whole thing is the bull breakout, and then a test somewhere down here for an attempt at a higher low major trend reversal. I did not think we were going to get above 72 because it's a reasonable looking wedge. However, whenever you get a wedge, sometimes you get a breakout above it. When you do, 50-50 chance the breakout fails and reverses, 50-50 chance you get some kind of a measured move up, maybe from a double bottom neckline. Really impressive reversal on the day. I did not think we would go this far up. There's still 5 minutes left of the day, but not likely to get up to yesterday's low. Stop entries today, not all that easy. A lot of them had you selling below bull bars or below bear bars that were fairly low in the bear flag. You know, so would you sell below 1? No. Would you sell below 2, 3, 4? No. And then clearly always in short 5, and selling below 8, not great. Selling below 9, not great. And then the same here. Selling below 13, not great. Selling below 16, not great. Selling below 27, not great. And that's always the case when the market's in a fairly strong trend. A lot of the sell signal bars do not look good. For the bulls, stop entries, the first one worth considering, well, I don't know, 16, 11. I would not. I would wait to see if we reverse up. The bear bars are too big. First one I thought was reasonable was this one. This was so extreme, and it's the 4th sell climax on the day, and we're right above the magnet, the low of last week. And it's possible we could reverse up and have a big trend from here for the rest of the day. So I think there's a good reason to buy that. And then buying 37, same thing. I said that a lot of times if you have a signal on the daily or weekly chart and then it triggers on the 5-minute chart, the market will usually, more often than not, reverse back above the signal. So going above last week's low is a sell signal on the weekly chart. The weekly chart went upside down. But when that happens, usually the market reverses back above the sell signal and then comes down later and tests it. Stop entry for the, so anyway, stop entries, it's really stop entry sells down here. I would take a buy here. And then 27, I would not take the sell because I thought we were always in long, and that we probably did not have much more to the downside after so many sell climaxes. And then 37, okay, buy. 44, we're always in long, so if you buy above 44 or above 48 or 49, stop is still down here. If we do come down here, we'll probably form a higher low major trend reversal. Even though we have a gap bar 46, there's so many sell climaxes, and the final one was so strong that I thought it was likely that we had seen the low of the day. And then we went by the close up here on 51. And then up here, stop entries, you know, maybe below 60, expecting a test back to the middle of the day's range, maybe to the 46 high, but a really tight bull channel. So minor reversal, which means if it sells off, it'll either be a bull flag or a trading range. And it turned out to be both. And then selling below 72 for the wedge. I don't know. I'd like to see a better sell signal bar, but we have a magnet below the midpoint of the day's range. So it's not, you know, it's not unreasonable to take the sell. And buying above 77 after a wedge top, I would not take that sell. Buy the close, 70, sell the close. I went always in short on 5, so that's sell the close. But bull body 6, bad follow through. Pretty good bear bar. 9. Is it sell to close? It's below 6. We'll probably go a little bit lower. So tricky. Sell to close 9. Same with 10. If you sell it, stop it up here. And here, again, the bulls get out, or the bears can get out, and they have to figure out how to get short again, either below a bear bar 13 or sell closes 14, 15. And then 19, a pretty big bar, and a series of sell to close bars. I don't know, we're probably going to bounce pretty soon, so I'm hesitant to sell 19 or 20, and definitely not 22. That's the same with selling down here, 34, 35, 36. Too much risk of a reversal, so I would not take those sell to close. Is it always in long? 25? I think it's always in long 25, 26. But, if you buy the close, your stop is down here. It's a minor reversal, so a trading range or bear flag is more likely than a bull trend. And if it's a trading range, you don't want to be buying too high. So even though probably buyers up here, it's better to wait to see what the pullback looks like. And the pullback did not get another reversal until 37. And then here, buy the close, probably always in long, 39, definitely 41. But gap bar 45, I would not take the sell. I would be long or look to buy a pullback. Double bottom up here, bulls looking for a higher low major trend reversal. Not enough bars for a major reversal, yet we still kept going up. You can argue that the bulls did not need a higher low because they had a lower low, but the lower low was a 14 bar bear micro channel, and that makes a lot of question. A lot of traders think that it's not really a good major trend reversal and that the reversal is still minor. So, a lower low major trend reversal 37, that does not look great. And I don't think of this as a higher low major trend reversal. I don't even think of this as one. Maybe a double bottom higher low. I still think we probably have to come down and create a better looking higher low major trend reversal. Limit orders. Bears were forced to sell above bull bars, which they don't want to do. Obviously, if they hold short, that's okay. If they do, I would get out above 22, possible low of the day. We got a second attempt here, and this one did become the low of the day. However, since the stop entries for the bulls above 6, above 11 are not great, even above 16, technically there are sellers above. However, if the market's in a sell climax and you get a bull bar closing near its high, I rarely will sell above that bull bar. And the opposite is true as well. When the market is rallying strongly and and I get a bear bar, I'm usually hesitant to buy below it, like below 46, below 60, below 72 or 74. I'd rather look to buy a reversal up. Very impressive reversal. We undid more than half of the sell-off. It still could fail, but right now this is so strongly up, it's possible that we could get a measured move up from a bull breakout above a wedge, which takes us way up there. Do I think that'll happen? No. However, big down, big up, big confusion. I suspect we might go sideways tomorrow and then into Friday, and then Friday becomes important. Do we close below last week's low, creating a better sell setup on the weekly chart, or do we close in the middle of this week or toward the high of this week, which would make it likely that we're still going to go higher before we get a correction? Does this trouble the bears who are looking for a swing down? No, because if this is the start of a bear trend and the market's let's say we're in a bear trend that's going down 100, 150, 200 points, the market's going to have very strong rallies during the sell-off. That's always the case. Whenever the market's in a bear trend, you always expect to see very strong reversals up, making traders think it's back to bullish. And the opposite's true in a bull trend. Right now we're still in a bull trend on the daily chart, weekly chart, monthly chart. You very often get very strong sell-offs and the bulls buy them. Today is an example. And then here as well, very strong sell-off. And then next day, we rallied for most of the day. Question about the close of 22. What was the probability that the day would continue to be a bear trend versus doing what it did? Question, I bought bar 19 close. Okay, bought the bar 19 close and held, bought more above 39. Turned out to be a profitable but a bit scary. Yeah, I think the logic is good. Once you start to get 4 or 5 consecutive sell climaxes, even if they're really big, the odds are the day is not going to continue that way. I have seen many days that look like this and they just collapsed from here. Instead of reversing up, they just dramatically collapsed. That's the risk, but that's rare. This is what usually happens. You get a reversal. And the bulls tried to get the reversal here, did not work. They tried again here. But what you did was smart. If you bought the 19 close, you knew the odds were against a big bear trend day. It's possible that, one of those 1 in 1,000 days happens. Every 5 years, every 10 years, you get a huge collapse day with consecutive sell climaxes, and it just keeps going down and down and down and down. It's not every 10 years. It's probably every 2 or 3 years, but you get them. Most of the time, you get this, and you don't know if it's going to come here or there. And if you're willing to use a wide stop and scale in, like you did, you can make money. So he bought here, he bought more above here, and then he got out over here, and he made break even on his first entry, and he probably made, I don't know, six points or so on his second entry. If you're taking that kind of trade, like he said in his questions, it's scary. You have to be willing to to remain objective. You also need to have a stop. You have to be thinking about how far down can I risk? How far down? Where is it that I know I'm wrong? And he had to risk about 10 points or so, right? And that's the nature of it. When you're selling in a sell climax and the range is big, you might have to risk 20 points, knowing that once every couple of years you're going to get stopped. Okay, can you clarify with examples a stop entry versus buy or sell the close entry? Yeah, bar 5 was sell the market or sell the close. We broke below yesterday's low, and we have a collapse bar, a surprise bar. The odds are we're going lower, so it's okay to sell the close. And 10, probably a big enough pair of bars, 9, 10, so we're going lower. So it's also sell the close, but it looks like a sell the close bear trend. And it looks like a consecutive sell climax bear trend, and that increases the chances of a reversal. Bar 51, a reasonable buy the close. The bulls, the bears tried to get a sell-off from the gap bar, and we got 3 consecutive bull bars closing on their highs. So bulls will buy the market, buy the close of the next bar, and a lot of them will swing until we get a reversal, bar 60, and then get out below. And then for stop entries today, it was really tough because the sell signal bars on the way down were all bad. However, as I said, I always try to think of it from the perspective of an always in bear. If the always in bear gets out above 11 or 16 and it's still always in short, he has to sell again, and he's going to sell below a bear bar. And if the bear bar does not look good, like 13, and then he gets a good bear bar 14, he's got to sell. He's got to sell below 14. So that's a stop entry sell, or he sells the close. Stop entry buys, the 2 that I thought were good today were 23, minor reversal scalp, and 37, I thought minor reversal but possible low of the day. So those were both reasonable. And there were others, but those were 2 of the best. Selling below 60, probably the scale in bears will sell there. So I think that's reasonable. Yes, scale in bears have sold this high, sold that high. So it's probably an okay stop entry short. I always like to see, if I'm looking to buy with a stop and a bear trend, I always like to see a reasonable buy setup, buy the close, buy this high, because the bulls who took those buys, if some of them will not get out, they're assuming that, well, maybe this is not the bottom. If it's not, then maybe one more leg down and we'll get a bottom and I'll buy more on the reversal up. So whenever I see reasonable buy setups and then I see a bear breakout, I'm usually trying to buy the reversal up, expecting that the traders who took reasonable trades should be able to avoid a loss, and that means the market usually will get back to their entry price. Okay, daily E-mini chart, a 20 gap bar buy with a lot of bull bars. Should we get above the all-time high before we get any kind of a correction? What's different about now? Why might that not happen? Okay, so that's the question. I'm going to go to the daily chart. He's saying, well, this chart does not have the 20-day exponential. This one does. So he's saying a lot of bull bars, really, really strong rally, and it is very strong bull trend, daily chart, weekly chart, monthly chart, all true. 20 gap bar buy, definitely. Big reversal up from the 20 bar moving average. Yes, that's all true. And the market has reversed many, many times on the way up, and that's always the case in a bull trend. Therefore, every time you see a reversal, you know the odds are you're going to get a new high, right? The odds are overwhelming that every reversal will fail and lead to a new high. That's true here as well. However, the odds are not as high here as they were with all of these other reversals. This is because the weekly chart and monthly chart are doing things that they have never done. The daily chart has not had a 3% correction in 244 days now. And in the past 90 years, that has never happened. So the daily chart's doing something it has never done. The weekly chart has not touched the weekly moving average in 49 weeks. That has never happened before. The monthly chart has not had a pullback below the low of the prior month in 12 months. That's only happened once in the past 50 years. And that streak lasted 13 months. So one more month longer than now. So while all of these other tops could have led to reversals, and but every reversal you have to assume will fail, this one has less of a chance of failing because of the historic things that are happening on the daily, weekly, and monthly chart. You know, the market tends to do what it's always done, and now it's doing things that it's never done before. That makes it unsustainable and unlikely to continue much longer. So with this big reversal up today, yeah, it's probably going to go to a new high, slightly more likely that we'll go to a new high, then begin the correction. However, the weekly and monthly charts, daily charts, they're all so unusual right now that, and the odds are higher than otherwise. The odds are higher now than any time over the past several months that we're going to begin a correction. You know, but to say that this is the beginning, or this is the beginning, or this is the beginning, is all wrong. You know, if you pick any one and bet that it's the right one, you're going to lose because most reversals fail. However, the odds are we'll probably pretty close to one, you know, sometime in the next few weeks. Okay, hope everybody has a good night.